Hello, my name is Nicole Elliott and I'm a technical analyst and private investor. And on today's show, I'm going to look in depth at three different precious metals. Now, one of the premises of technical analysis is that things that are similar and alike, say US stock indices or base metals, grains, oilseeds, they should all be singing from the same hymn sheet, i.e. if one is bullish, the others should back it up. If one is bearish, the others should back it up too, and then you can feel more confident in your analysis. And this is very much the case at the moment with the three I've picked. The first one is the daily chart of spot gold. And you can see that so far since January this year, we've held above this horizontal line, which lies at exactly $1,276, but this week have broken below it. This week and last week are slightly tricky in that we have Easter holidays, and then also coming up we've got big holidays in Japan because they're going to have a new emperor. That's 2 weeks they're going to be off on holiday, and then we've got bank holidays here in Britain. So be careful, these are slightly thin markets, a bit more difficult. But what this big pattern that I've shown you is a complex head and shoulders top. Gold has already dropped by $50 from this year's peak. On a weekly close below that neckline, or I'd say below $1,270, that would complete this very large topping pattern. It's taken 4 months to build, and there'll be significant further downside moves. My second chart for comparison is silver. This one's a bit different. It's a weekly chart, and I've taken from the high in 2017, I've drawn horizontal lines. These are Fibonacci retracement resistance levels, the horizontal one. And you can see that in February, already the silver price was struggling at the $16 per ounce level, which is a 50% retracement from that high. And also it lines up with a diagonal descending trend line. So the big thing here, the big takeaway here is that this is very much a bear market. The bounce that we saw since November last year through to February is a corrective bounce, and it stopped at the 50% level with a slightly unusual broadening top type pattern. And now we're drifting lower, but we're going very slowly. The reason we're going so slowly in silver, and I think we'll continue to move very slowly lower, is that the closer you get to zero, the more difficult, significant drops in price are, and the percentage drops are far greater. So, and let's not forget, this is cheap at the moment, but I would not be buying it. The record high was nearly $50. Now we're struggling here at 15. And there's still more to come, but it'll be slow work. So if you're considering shorting something, I would urge you to consider gold rather than silver. And my final chart is quite different again. It's a weekly chart of spot palladium. Now this one has a different dynamic in that, as well as being a precious metal, it's used extensively in the automotive industry. Hence the big rally as they all scramble to sort out diesel exhausts. And it had been going up, and it had doubled in price from August last year, where it was trading just over $800. It hit $1,620 per ounce. That's a new all-time record high, far higher than anything we've ever seen. And at that high, we've got a little dragonfly doji or shooting star candle, followed by a giant red one called a Marubozu. This is quite important because that red one engulfs, i.e. undoes, all the work that we've been doing for the previous 5 weeks. That's quite significant, and it marks, if not a total top, certainly a medium, possibly long-term top to this market. Subsequent price action is a tiny little triangle, and what with the Marubozu and the high point, it's an inverted pennant. This is the bearish chart pattern, and I expect further significant losses shortly.